Hi, this is Virginia Gardner with Roy Wheeler, and I'm joined today with by Jay Domenic of Movement Mortgage, who's one of my personal um, lender partners and also the preferred lender for Roy Wheeler Realty Company. Welcome, Jay.
Thank
Thank you
you.
for being
Thanks for
here.
having me.
Before we get started, I did go on to the Movement website and I saw something that for some reason I'd never seen before that I loved. And it said, um, hang on, that Movement states that it has a mission to love and value people. And, today I think we're so tired of big business, the big corporations and, the people get lost in the shuffle. How does, Movement is relatively new. It's only, what, about 12 years old?
About that, it was started right after the big market shakeup back in 2008.
Okay. And so did they come into this market with a different vision?
Absolutely, with a different vision and a different way of doing things. So, to just touch on the mission statement, it's our mission is to love and value people as we lead a movement of change in our industry, corporate cultures, and communities. Okay, so Moving Mortgage is a mortgage company born in the recession, and we started what many people have copied it or tried to, and that was a process where things were done differently. So I can tell you that when the company I previously worked for, I would take a good loan application, I would submit it to underwriting, and it would sit for a couple weeks maybe till somebody got around and looked at it, and then it would sit around till the processor picked it up after a few weeks. The whole process was really slow, and Moving Mortgage implemented this process where our goal when I submit a good loan application to underwriting, it's our goal is to underwrite that in 6 hours, and then
Wow.
some of those conditions to really take care of those in 7 business days. So we were able to, and the whole company was built and structured around that. So when I was interviewed for the job initially, and they told me this process, my thought process was, well, this is a bunch of BS. That really can't happen. But it's nice to know that you're going to do stuff try to do stuff faster than previously, what I had previously known. And then I came to find out once I started working here that is the mindset. That is really the whole structure of the company. Now, I would be lying to say with these record volumes going right now that we're hitting all those goals. But the fact of the matter is we're not doing too badly. And even with our expanded time frame from initial underwrite at this moment, it's still better than anything I have had before.
Wow.
The other thing about the corporate culture, when they say we exist to love and value people, they really mean it. And it's a very charitable organization. As a matter of fact, a great portion of Movement Mortgage is owned by the Movement Foundation, which is a charitable organization. And
I love that.
we have different programs. A great percentage of employees, including me, donate some money of our paycheck into a program called Love Works, and it's to help employees that have any issues that come up. We're building charter schools. There's lots of people go on mission statements. The joke was when we were the day that Super Bowl aired and Quicken was spending untold millions on a 30-second commercial, Moving Mortgage had spent X millions of dollars building a school for a community. So that's kind of the mindset, and the goal is by our CEO is to eventually that all the money goes to the charitable foundation. Any money I donate personally to a charitable organization, my company will match it. Any hours I spent working for AHIP or something like that, they'll prorate that and make that donation on my behalf. So it is a different company.
That I love that. So it's another great reason to work with you, Jay, because you work with a great company.
Thank you.
All right. So let me just ask you a few questions, and hopefully this will let people know where the mortgage industry is right now. You know, we're shooting this middle of August 2020. 2020's been a nutso year in so many ways. But in the real estate and mortgage industries, it has been steady. And we have not seen a whole lot of blips happening across the landscape. So if you're a buyer right now, what are the opportunities that you would be looking at?
Well, I think the opportunities are many and fantastic. So first and foremost is we're in a time of virtually unprecedented mortgage interest rates. I mean, the rates are very low. You know, if you get when you're getting a rate with a 3 in front of it, whether it's upper threes, lower threes,
Yeah.
it's crazy. You and I have been around long enough to know when I got in the mortgage business in 1987, the fixed rates were 12.5%. And if I had gone in 5 years earlier, they would have been 17%, something like that. So, you know, it's just astounding to me to have an interest rate with a 3 in front of it. So that in and of itself, it makes an extraordinary time very affordable to buy a house. Also, too, there are great programs out there, especially for first-time home buyers. I've talked a lot about this recently, but there's a myth out there, and it's perpetuated in the media when you watch TV. I constantly see these people, and they'll talk about, oh, you know, you buy a house, you have to put 20% down, or you have to put 10% down, or something like that. And the average millennial thinks that you have to put 10% down. It's just not true. You know, we've got, if you're a veteran, you can put 0% down. There's a USDA loan program with 0% down. The Virginia Housing Agency has 0% down loans. Even conventional loans as little as 3%, FHA 3.5%. There are plenty of low and no down payment programs available to help first-time home buyers, which is primarily their biggest obstacle into home ownership is the cash. But they have this perception they have to wait till they save a ton of money. They don't.
One of the things that I remember in earlier days with first-time home buyers, so that was great. Of course, I've been doing this for 30 years, so that was a long time ago, and that was great. But the mortgage insurance was a killer. So that's even improved, hasn't it?
Oh, greatly so. So there was a time if you were putting a 5% down, your mortgage insurance would be well over 1%, 1.5% per year, or something like that. Now it's closely tied to credit score. So if you've got a great credit score, you know, the mortgage insurance is really a good deal. So the other thing I talk about in regards to mortgage insurance is, you know, people perceive mortgage insurance as this horrible thing that it's a punishment because I don't have my 20% down. I look at it just the opposite way. Mortgage insurance allows you to buy a house. It's a great thing. Mortgage insurance allows you to buy a house without having to save for 20% down. If you want to buy a $300,000 house, the average person may take 30 years before they can save $60,000. Mortgage insurance allows you to get into that house. But yeah, it's much more affordable than it used to be. But it is closely tied to, at least on conventional loans, closely tied to credit score. Government loans, VA, FHA, USDA, everybody gets the same mortgage insurance.
Okay. All right. So looking from a seller's perspective, this is kind of an odd question, but where do you see the market? How's that benefiting a seller at the moment?
Well, the way it benefits the seller right now is it's pulled in a lot of people. These low interest rates are no secret. You can't, you know, swing a cat without hitting, you know, an ad for a low interest rate. So that has pulled out some buyers. I've got some people that maybe hadn't considered it before, but it's bringing in some potential first-time home buyers, and that's what triggers this whole thing of buying houses. So, you know, somebody could sell their house and they could go to their next house. So the first-time home buyers are critical, but that's brought a lot of buyers out, more than we have sellers probably. So I think that's, as it affects the seller, you know, you have plenty of people that are out looking
more qualified buyers, right? Yeah,
yes,
that's
exactly.
Great. All right, so so what do you see happening? How do you see the next? Actually, you know, we were just talking about this. I was going to ask you, how do you expect the next 90 days to look? But reality is, though we have been in many years a seasonal situation. So spring market languishes in the summer, jumps up a little bit in the fall, and then it languishes again. We were talking, it doesn't look like that's going to happen, does it?
No, it hasn't happened so far this year, and I don't expect it to happen again. The only concern I'd have out there is that at some point, are people going to, I thought people would stop listing houses, which if the houses aren't there to buy, then then buyers have nowhere to go. But I've not seen, I've been super busy, not just with refinances, but with purchases too. Probably a great percentage of my loans are actually purchases. So I think that's going to continue. The interest rates are going to stay low. Are they going to stay at all-time lows? No, they'll go up some. But like I said, hey, even if the rates go to 3 3/4, wow. So that will continue. The government's on board with supporting low interest rates to help the economy recover. So I think we're in for the long haul there with good programs, good interest rates. That's going to help keep the buyers supplied as long as the employment situation stays no worse than it is. And that can only improve.
That's great. Well, let's, for buyers that might be watching this, from loan app, I mean, this is with an average loan application, so not one that's a difficult situation. From application to close, what are we looking at time-wise?
Well, in a normal world, and when I say a normal world, I would say before February, in the old days,
right.
But I would normally say 30 days. However, these days I'm telling the realtors I would like to not see a contract with not 45 days at least.
Okay, 45 to 60 days.
For ratification. And the reason is everybody's just swamped with volume. Lenders are swamped with volume. We're a little bit slower. Everybody's a little bit slower. I talk to friends and lenders in town. Title companies are slower. Appraisers are slower. Sometimes it's taking me 3 weeks to get an appraisal done. But you can't have a 30-day closing if it's going to take 3 weeks to get an appraisal done.
Okay. All right. All right. Well, that's great. Jay, you're wonderful. Thank you. I love working with you. I love chatting with you. We don't see each other enough in person anymore, of course.
I know. I miss seeing everybody. I'm in my office, but I'm kind of secluded up here on the third floor. So
exactly. All right. Yeah. Again, thank you so much. I really appreciate your taking the time this morning, and maybe we'll do this again.
Yes, be happy to.
That's great. Thank you.
Thank you.